Hello viewers, in this sessions we're going to be start with one of the important problem under assessment of company. So this is a question which is asked in 2019 question paper. So this is a very important, we can expect similar kind of problem in this in your exam also. So let's listen carefully. Okay, so let's start with problem. The following is the information of Tanush and Company Limited for the assessment year 2019-20. So the information, the P&L account is given. So we have to be identify which one is a business income, which one is a non-business income, and which and all item will going to be come under the step number 2. So let's start with cost of goods sold. So obviously it is a related to a business expense, they already ignore recorded, so ignore, don't take it into consideration. Next one is a tax relating to long-term capital gain. So it is considered as a non-business income, a non-business expenses, guys. Why? Because so it is a long-term capital gain is not at all not related to the business head, it is a some other head of income. So that's why the tax they're paying for some other heads of income, so that's why it is considered as a non-business expenses. So next one is depreciation. I already explained, whenever the depreciation, if it is provided under P&L account as well as the adjustment, so P&L account amount has to be addable as a non-business expenses, and if it is a provided under adjustment will going to be considered as in business expenses. Okay, so in this problem they provided both under the P&L account as well as the adjustment. There is depreciable allowable as per the income tax at 50,000 is given. So that's why 85,000 will going to be added as a non-business expenses, and 50,000 will going to be as deduct as a the business or allowable expenses. Next one is proposed dividend. So proposed dividend is considered as a non-business expenses because it is a paid out of appropriation of the profit. So that's why it is a return to the shareholders, so it is not an expenses for the business, so that's why it is considered as a non-business expenses, so add back. Next one is income tax. Income tax is related to an personal, so that's why it is considered as a non-business expenses, so add back. So net profit is given, so we're going to be considered that one. So let's come to the additional information. Depreciation I already explained. Next one is brought forward of business losses as per books is given. In last class, last problems and all, they given both books of accounts as well as income tax point of view. So books of accounts will going to be come under step number 2, and as per IT will going to come under step number 1. But in this problem they given only brought forward of business losses as per books is given, so this item will going to be come under step number 2. So but whenever you are calculating the brought forward of business losses as per books of accounts, so there will be whichever is less we have to be taken into consideration. But here brought forward of unobserved depreciation is not given as per books, so that's why we're going to be considered as a brought forward of unobserved depreciation will going to be considered as a nil. So that's why here we have to be taken as a whichever is less is nothing, but you should not take as a 1,25,000, you always consider as a nil only. So I'm going to be once again explain when we are solving books of accounts competition. Next one is third adjustment is brought forward of unobserved depreciation. Here the nothing they mention whether it is related to an books of accounts or whether it is related to as per the IT. Assume that it is related to an IT only, so that's why it is come under step number 1. So this one is come under step number 2, this one is come under step number 1 for computation of taxable income under normal provision of IT. So next one is come under the credit side of the P&L account. Sales is related to an business, so ignore. Long-term capital gain liable for STT. So here STT is given. I already explained, whenever the long-term capital gain liable for STT, if it is a more than 1 lakh rupees, we have to be compute the tax liability 10% separately when you are computing the normal provision of IT. Okay, so here amount is given 1,50,000 rupees up to 1 lakh as per income tax under section 10 section 38 it is exempted. If it is exceed 1 lakh, so the remaining amount is a taxable at a rate of 10%. So in this problem exceeding 1 lakh means 50,000 is a taxable at a rate of 50,000 is a taxable at a rate of 10%. So keep in mind one more point in here. STT is nothing but security transaction tax. So that means any kind of listed shares, mutual funds, UTI, if it is a sale through an recognized stock exchanges, such kind of transaction is called as a security transaction tax, and the period will going to be considered as under security transaction tax for the means if it is sold less than 1 year, it is considered as a short-term capital gain. If it is sold more than 1 year, it is called as a long-term capital gain liable under STT. Okay, understood, right? So next one is interest on government securities. So the interest on government securities is also considered as a non-business income, and this one also non-business income. So we have to be both deduct as a non-business income under working note, competition of taxable income under business. And keep in mind one more point here. So interest on government securities is come under the income from other sources, and this one is come under the long-term capital gain liable for STT under the separate heading. So this is a problem explanation. Will in next sessions will going to be solved by solution for this problem. So take care, have a nice day, bye.